take the profit in a winning trade than it is when to cut the loss in a losing trade. So when I have a good entry, everything is just so much easier. And once I am in the position, when my entry is executed, the only thing I focus on, and I focus on this right away, is to decide when to cut the loss if the price goes into the wrong direction. It's very important for me to have that sorted out right away after my entry, and then I can only focus on the fun part when that is done, which is deciding when to take the profit. And I will use this strategy so much in the coming alt season, and this is the strategy where I will put the most focus in the next bull run as well. And now it's time to look at a few more examples, because there are a lot of details when it comes to this strategy. In this example, it was very clear. We had a clear breakout, a nice candle closing above this wick, and the price going basically straight up here. So everything in this example was very easy, but there are a lot more details that I pay attention to when it comes to these entries and these trades overall. So as I said in the beginning of the video, the resistance can be sloped like this, it can be sloped like this, there can be a lot of different patterns. So let's have a look at a few more examples. All right, so here is a completely different example, but where I'm using the same concept when I'm trading it. So this was a coin, it was very bullish when it, and the price would come right back down to my stop loss and I would be out of the trade. The same thing applies to if I would use a trailing stop loss, you know, where the stop loss is following the price when the price is going up. So let me show you, the price is going up like this. Okay, so now I am in profit. So then people would use trailing stop losses where the stop loss is automatically following the price like this, but then it's enough for one red candle and I would be out of the trade. And of course, that would lead to some profit, but that's not how I personally like to maximize profits. This method has not worked for me at all in the past. I never use trailing stop losses, and most of the times when I trade breakouts like this, I only put a take profit order in the exchange if I'm going away from the computer or if I'm going to sleep and I decide to hold the trade overnight. And the third thing that I look at when I decide when to exit the trade is the RSI level on a lower time frame. So for example, if I took the entry based on the 1 hour time frame, I would go down to the 50-minute, 5-minute, or even the 1-minute time frame and looking at the RSI level on the lower time frame. And if I want a fast profit, I wait for the price to hit the RSI above the 70 level on a lower time frame. So for example, in this case, on the 15-minute time frame, the RSI is now well above the 70 level. So this could be a reason for me to close the position if I want a fast profit. But if I believe in the trade, I would hold it for a bit longer. And the most important thing with this strategy for me when I use it is the end. So my first priority is finding a good entry. And when I am in an entry, the second priority is to decide a stop loss price. For me personally, sometimes I use a stop loss in my exchange, but sometimes I close the trade manually if I'm watching the trade as it happens. And the third priority is decide when to take the profit. So this is my order of priority when I'm trading. So at this point, I am only focused on finding a good entry and taking this entry where I think this is a high probability trade. Once I am in the trade, I'm deciding my stop loss price, and in this case it would be below this level or slightly below the previous resistance. And now when I have these two figured out, I am simply waiting for the price action to play out a little bit, and I am deciding when to take the profit based on a few different things. So the first thing I am considering, for how long have I been in the trade, and the second thing is how the price action looks. So let's say that I have been in the trade for 20 minutes and the price action still looks very bullish. Then I might hold the trade for a bit longer. But if I've been in the trade for 2 hours and the price is looking slow and going sideways, I might just close the position. And once again, I wish I could tell you exact levels, exact times, and exactly what to do, because all beginners in trading, they want to find templates. They want to find stuff that they can just copy right away. But keep in mind, guys, trading is a skill. You cannot just copy exactly what someone is doing. But this is my thought process when I decide when to take the profit. Because if I would set the take profit at a certain level, 90% of the times the price would not get their entry. I feel like if I have a good entry in a trade, I have done 90% of the work. So even if I, for some reason, lose this trade in the end, not taking the profit in time, or taking the profit too early, or closing it at break even, it doesn't really matter, because as a trader, I think the very most important thing is to take good entries. And of course, risk management. So focusing on risk management management and taking good entries, I think is the most important thing when it comes to trading. And when I talk about risk management, I do not talk about stop losses, because stop losses are not enough for good risk management. In my opinion, good risk management is the only trade with a small account that I am very comfortable losing, and never going all in to a trade, never trading with money. That's important to me. That's what I'm talking about when I talk about risk management. And of course, not using leverage when trading, because using leverage is the worst when it comes to risk management. The only times I personally use leverage is when I'm trading a small account that I'm willing to lose by taking an extremely high risk on a trade. So in this case, I think 90% of the work is done when this entry is taken, because this was a very good entry on this example. And in this example, the price continued to the upside, and it's impossible for me to tell you exactly where I would take the profit, because it's very different being in the moment and watching the trade with real money happening than backtesting it like I am doing right now, just to show you an example. But again, the entry was really good, and that's the very most important thing. And one very important thing when it comes to this strategy is to not forcing trades, because these entries are not showing up very often, to be honest. It's not like I can trade 5 of these every day, and sometimes I cannot even find one of these entries in a week. And the reason why, when I'm not into a position, the only focus I have is finding a good entry is because it's a lot easier to decide when to take length, but also when it comes to the height of the price action in this pattern. And one very important detail is that if this would be looking more like this, if the price action would consolidate like this, that would be more like a rising wedge. And rising wedges are not bullish. So if the price breaks out from here, that can lead to a fake out and the price going straight back down. So that's very dangerous, and it's a very small but extremely important detail when it comes to the formation of the pattern. This pattern looks very, very bullish to me. The price is squeezed into a narrow range of price action where the price is still going upwards. So now I'm looking for the price to either break down or to break up, but I'm only interested in going long if the price breaks up from here. So let's see what will happen. We have another candle inside the pattern, and then we had a candle punching through the resistance line, but the candle did not close above this line. And that's the most important thing, to have patience and wait for the candle to close. And if it's closing below this line, that means no entry. Let's have a look at the next candle. The candle is still closing inside this pattern. Next candle also closing inside the pumped like this. We had a very big candle here going up 7.3% in only 1 hour, and before that it pumped as well, and then the pump continued after that candle, and the coin went into a consolidation phase like this. And this is maybe not the most beautiful pattern, but it's still something. We can see that we have candle bodies closing here, we have a body close here, body close there, body close here, and we have a few wicks here, body close there, body close there. So this is the line we're aligning. Everything doesn't have to be perfect, but we get an overall idea of the direction of the consolidation phase, right? So this is now my resistance line that I'm watching before I potentially take this trade. And I can also draw a line on the bottom here to see if or when the price breaks down from this pattern as well. I'm not interested in shorting right now because this coin is very, very bullish. So I'm only looking for long positions because we had such a big pump on this coin, right? And this is called a bullish flag. So as you can see, a flag is smaller than, for example, a triangle. A triangle can be very big. For example, a triangle can look like this. So we can have a longer support line and resistance kind of like this. So the price could go all the way up here and then consolidating in this triangle. But flags are usually a bit smaller than triangles and wedges. Both when it comes to the length, I'm not trading this right now, but I'm trying to explain what I usually do in the live market. So now when the position is taken, the only thing I care about is deciding when I should close the trade if it goes into the wrong direction. And in this case, I have 3 options in my opinion, because this pattern is pretty small. So option 1 is to put it slightly below the previous resistance. That would give a very good risk to reward, but there's also a high risk that the next candle will wick down and close my position. Option 2 is to put it slightly below this entry candle, the opening of the entry candle. And this would probably be my preferred way in this specific case, because when I decide where to put the stop loss, I consider a lot of things. I consider how big the entry candle is. I consider how far from the previous previous resistance this level is, and I also consider how likely I think it is for the price to just continue straight up, or how likely it is for the price to come down and retest maybe this level and then continue upwards. And the third option would be to put it slightly below this support line, because if the price goes back down here, the trade is most likely dead. But this would of course lead to a bigger loss if the price went down there. So in this case, I would probably put it slightly below the opening of the entry candle. And now when the stop loss price is decided, the only thing I care about is when to take the profit if profit is given. So let's have a look at what happens next in this example. The next candle is in the green and I would now be in profit, and that's always nice because then it's easier to relax and to take better decisions, because it always sucks being in a loss. It's always a lot harder to decide when to cut the loss than it is when to take the profit. So let's see what happens next in this trade. The price continues to pump and there we have a red candle. So this red candle is still closing well above my entry, so that would still be a profitable trade, but it might be a good idea to close this trade when this red candle is forming. But again, it's hard to say now when I'm backtesting what I would do in the real life example on this trade specifically. No matter what coin or asset, I am looking at other things as well. For example, the state of the crypto market. I'm also looking at the stock market, what day of the week it is, and if there's a reason for this coin to pump. It's important to look at many different things, but this is still the strategy that I use to execute my trades and to decide when to enter a trade. So my position would now be opened, and the first thing that I would do is to decide when to close the trade if it goes into the wrong direction. So the stop loss would go below the previous resistance, and this is different from time to time. Sometimes I put it slightly below the resistance line, just like this, and sometimes I put it all the way down here below this previous bottom. So the bottom that is forming just before the breakout. So not this bottom, not this bottom, not this bottom, the most recent bottom before the breakout. And now you probably wonder, so when do you take the profit? And I wish I could tell you that I use a fixed risk to reward or a fixed price level or anything like that, but that's not the case. When I am trading, I am doing it one step at a time. When I am not in a position, my only focus is to get into a good trade entry. I'm only focusing on the entry, right? Pattern, the next one inside the pattern, it looks like the price action might want to break down from this pattern, right? And keep in mind that I said earlier in this video, the resistance line is the most important line to watch, in my opinion. The bottom line is just additional information, and this is secondary. This is the primary level I'm watching when I'm about to enter these kind of trades. And again, this price action, it punched through a little bit to the downside from this pattern, but the price is still closing inside the pattern, and the bullish flag is getting stronger and stronger. And now the price is using this line as a support, and the price is bouncing back into the pattern, and the bullish flag is now even stronger. One more candle inside, and this is the entry candle. The candle is strong, it's big, it's green, it has no indecisive wicks. For example, like this candle, it's a very indecisive candle. Also these two candles, the wicks are just too big, and also they are closing inside this pattern. But this one is strong and no indecisive wicks, and it's closing well above all of these previous wicks. So that's my entry candle. So I'm going long here. And if you remember from the last example, you can scroll back in this video because I don't want to write the text again. But now when I'm not in a trade, the only thing I care about is taking a high probability, good quality entry that I can be proud of. And now when I took the position, again, this is just an example. Obviously